Hi, I'm Roger Lemaitre. I'm the president and CEO of UEX Corporation. We're one of the largest uranium junior companies in space. We're focused in the Athabasca Basin. We have a portfolio of assets that range from development ready and emerging producer projects all the way through to grassroots projects. We're going to be a producer in the next two stages of the uranium cycle with a long-term sustainability due to our very impressive portfolio of opportunities spanning from resource level projects all the way to grassroots level projects.
Welcome back, Roger.
Well, thanks for having me back.
Well, we spoke Friday and we went through the JCU conversation. So if people want to talk about JCU and Denison, etc., check the link below. Really fantastic conversation. One of my favorite of the year, actually. Check that below. Today, we're going to talk about the business of running the business, which is the day job when you're not doing an M&A. Okay, so I want to start off with a little bit about. It's like we said when we spoke last week. Things have changed. The playing field has changed. Now, with that deal, the JCU deal, / Denison deal, things have changed. So you're going to have to start thinking about things differently. You're going to be perceived differently in the marketplace, and those conversations will change. So let's talk about what Wheeler River and Millenium means for the business.
Well, it's a definite shift in the focus of where our company goes. Instead of being sort of broadly focused exclusively on growth and focusing on earlier stage and mid-stage projects, we're going to have that opportunity to focus on, or not focus on, but we participate in future production in the next one or two cycles. But since we're not the majority operator or the operator or majority owner of those projects, it frees up resources to be able to continue to grow the company. And so while we have a little bit, I wouldn't say it's autopilot, but kind of like autopilot when it comes to Wheeler River, our job is to hold the operator accountable. That doesn't take the same amount of energy or effort as it does to be the operator. It allows us to sit there and say, okay, let's look at the rest of our portfolio. How do we grow and continue to grow our higher end or more well-developed projects to maintain production over the long term? So instead of sitting there saying, okay, we got a portfolio of assets and we're ready to move and develop some of these forward, we can say, okay, we're really only going to focus on the top tier projects in the future and try to grow the company's resources and our ability with things that are in our control, like at Shea, hopefully be Shea Creek and at our Christie Lake projects. And it allows us to let go of, in terms of some of our earlier stage projects and find partners on them, and maybe even some of the ones that we would focus on in the last year or so before the JCU transaction, and say, yeah, things like Hidden Bay, maybe there's pieces of that because it's a monstrously large project that would be substantial flagships for a lot of our smaller peers. Maybe it's time for us to let our partners start to operate some of those, because we won't be able to even operate those like we have been over the last couple of years. So it creates a lot more opportunity to see more of the portfolio working with other people's resources and money. Okay,
well, let's talk about leave the growth bit for now. I want to focus on the production bit, because you can now talk about it, right? You are effectively a producer, and it's that language or perception in the marketplace, which I referred to being able to have conversations with banks and financiers and with a different tone of voice here. So can we focus on, well, you actually used a phrase there, which is kind of like be in production in one or two cycles. What does that mean?
Well, when I look at the next, some things that are probably likely going to go, especially in Canada, in the next run on price, I think while we're excited about uranium now, I can't say that at today's prices there's going to be anything new coming on. I mean, I think there's possible projects coming on. I mean, Wheeler River is potentially one of the lower cost projects out there. So yeah, it could come on, but I think most investors kind of like that capital return, and they probably need to see a bit of a higher price before they put substantial investments in the ground. So in that next price movement that spurs on the next level production, we're going to have a piece of the ownership at Wheeler River. We're going to have a piece of the ownership at Wheeler River, which is Griffin and Phoenix, and that will allow us. Those are the most likely, two of the three most likely projects to move forward, at least in Canada, in the next cycle, and we're going to be participating in that. But we also have assets that probably aren't ready to go today, or maybe in the next 12 months to move forward, that when you look at the next cycle would be the ones that replace the things like your existing Cigar Lakes, your McArthur Rivers, and projects that might come into production, like your Arrows and your Phoenixes in the current sort of run up. So it gives us that longer term sustainability. That's a Kegavik or a Shea Creek or Horseshoe-Raven for us.
Okay, but what I'm trying to get at is the time frame. People talk about cycles, right? And it's like, okay, so 2 years, 5 years, 10 years. What are we talking about here? Because obviously people hark back to 2011, Fukushima. That was the last cycle, right? And now we're sort of seeing some sort of momentum towards the end of this year, beginning of next year, where perhaps there is price discovery, and that's fine too. And that price discovery then should allow companies to get back into production, or for development companies to get into production. So that's all good. And Millennial and Wheeler Creek is potentially your way to actually say, I am a producer. What's the next cycle? What's the second cycle? How far away is this?
Gosh, if I wish I knew exactly what that would be, but if you were to look at the uranium cycles, they finally follow a 10-year cycle. So you're probably looking, this cycle's in the next year to 5 years. The following one's probably 10 years down the road. And you just look at the last cycle to give you kind of an indication of where that is. I do think the next cycle, the one that follows this one, will probably come quicker, only from a supply point of view, because the supply is going to be a little more challenging. When you look out a decade from now, Kazakhs are going to be on the backside of their curve, and debatable about whether head grades go down, they start mining lower grade material. But your monster projects like your McArthur Rivers and your Cigar Lakes are going to be at the end of their lives, and so there's going to be tremendous demand. So I believe that the second cycle is probably shorter than historically has been the case between the peaks. But I'm also a little bit biased. I'm in the uranium sector. But when you look out and say, okay, I'm going to replace the McArthur River, you look at most projects out there nowadays, that's 4 or 5 projects, not one. You get lucky and find an arrow. Sure, it's 1-to-1, but most situations you're picking up 4 or 5 millenniums. Or if you're picking up an ISR project, you're buying, 10 of those, or put 10 of those into production. So because those big projects are going to be on their downslope, I think there's less window of time between that next sort of replacement pounds that get into the market.
Right. Okay. So you just bought into the producer league. Okay. When things get going again with those 2 assets, you've got a small part, non-controlling interest in those. Is that right?
That's correct.
Okay, fine. Yeah. And with regards to the growth, so you can't do anything about that. You've got to wait for price discovery. You've also got to wait for your JV partner to actually do stuff with that, and you may be the beneficiary of that. With the bits that you are in control of, your growth portfolio, we'll call it, Shea Creek, Christie Lake. Those are the 2 that people talk about most. You talk about most. How do you play that now? That's so different from the way you would have before the JCU deal.
I think we play that a little more focused. And what I mean by that is, instead of sitting there saying, okay, we're going to do a little bit of work on these other projects as time being, no, we'll just over the next couple of years focus exclusively on those projects to get them to meet. You can always look at things 2 ways when it comes to this exploration work. You can go really fast and hope to hit something. You can go really slow and be methodical. And I think our process has always been a little more scientific and methodical. I think we now accelerate the exploration on those projects to do a little bit more invest a little bit more than we have in the past. And to the detriment maybe of our earlier stage projects, and saying, okay, we haven't had to spend a lot of money to hold those, but now we don't need to spend any money on those at all in the future, because I don't think we have to grow. Our approach has always been to grow a target inventory. It may be project independent. I think what you'll see now is our focus will be exclusively on the 3-4 of those projects, as opposed to what other targets exist across the rest of our portfolio and how do they rank. And we like to look at not so much the project, but which is the best targets to test first. And so a little blinder to those earlier stage projects.
Understood. But are you going to be able to raise money more easily and more cheaply as a result of the JCU deal, having this sort of, we'll call it relatively near-term production?
Yeah, I believe so. I believe so. Because we're closer to that production, because we're sitting on, we've just become the fifth largest resource holder in the junior space in the globe and third largest in the Athabasca Basin. It changes things substantially in terms of how people who are looking at the space or who have been excluded from working with us because of our size can now sort of think about us. And so I think, yes, it will help. Will it always be cheaper? Well, you hope so. You certainly hope so. And we'll be positioning ourselves to make sure it's cheaper. But yes, I think it just changes. It broadens out the investor appeal to a wider audience.
If I look at some of the deals that have been done in the uranium junior space in the past 18 months, in terms of fundraising, right? It's been from a position of weakness. They've had to do deals to keep the lights on, to survive, to reach this moment of where you're sort of sensing that something's a little bit closer. Mind you, hasn't it always been for the last 4 years? Do you start to have a choice about with regards to the types of people that you will do business with? Because if I look at some of those deals, I'm like, oh boy, that deal was punitive and destructive to shareholders, and the optionality with the lenders is, well, it's all in their favor.
Oh no, that's definitely changed in the last 12 months, and increasingly so. I think back to our May 2019 financing, where we put it together on our own without a lot of help. It was a lot more scrappy, I think I would call it. A lot more people needed, or groups needed to put that money together. To put together a couple $1 million. And now you have groups saying, yeah, I'd rather be in for a much larger chunk of money at this point in time. And it doesn't take as many people to put together the same amount of money, or funds to put together the same amount of money. And I think you've seen a change, and part of it's a change in the quantum that you see people raising in the last little while, from to keep the lights on money, a couple $100,000 to a couple $1 million to tens of millions of dollars, and some deals here recently up to $100 million on opportunities that are not necessarily, that's the kind of raising you kind of see when you see development happening, but they're not quite at the development ready stage, or not putting that into development. So certainly changed. The ESG component has changed, and people coming into uranium, because I think a lot of uranium companies, particularly in Canada, get a really positive ESG component or thought to it, and based a lot upon the incumbents that are in the space that have done phenomenal work on the ESG front and are world leaders. So I do see that. I do see that changing. I do see that. I see a very different. 2 years ago, when we called people, it was like we had leprosy and nobody wanted to come anywhere near us. And I think that wasn't unique to a company; it was unique to the space. It was to the space. Now people are calling up out of the blue, saying we'd like to know more. So it's a definite change. And I think being a larger company with a larger resource and closer to the emerging production puts you on a lot more radar screens.
Yeah. Yes, I mean, it's a very big consideration now for in fact, uranium juniors should be able to take advantage of that changing narrative in the market. Just on the focus, which is Shea, Christie Lake, you've announced some drill programs. Do you want to sort of talk through, well, how much money have you got actually right now?
We have about $5.5 million in the bank right now.
Okay.
So we're not in a bad spot.
Okay.
We're seeing all the things you want to see around deposits that on our two areas at Christie Lake that we're going to follow up on this year. And depending upon results, I hope we don't get back to what we call the A trend, which is the first strand of the McArthur River fault structure that comes onto our property before it jumps across to where our deposits are, because that means we've got success along the way. So if we get to A conductor, I'll be saying, yeah, well, the targets didn't pan out, but I think it's really the kind of stuff that our team does really well. I can't say anyone can do grassroots exploration where you drill a hole and hope for the best and based on things, but it's putting together that jigsaw puzzle with half the pieces missing. And it's what this team does really well. So we're really happy with the pieces that we're seeing at Christie Lake to follow up on that with more drilling. Shea Creek, that one was still there. It's still our highest priority project in the portfolio. It's still challenged with our friends at Orano, with their things. We've been talking to them about getting things restarted again for 2022. With JCU deal being so time intensive, that was put on the back burner here. We'll be talking to them again, but I don't think there's any doubt amongst us and them that the targets that our teams identified are really high priority. The question will be, what does Orano's budgets look like for next year? And then if they don't have the funds, what can we do to make that project go forward?
Okay, so I want to talk about this year. You've had a great year. Low of 12, high of 50. Okay, you're at 38. Around the time, just pre-announcing JCU deal, you were sort of hovering near 40 cents. Okay, so the market likes the uranium story this year. You announced the JCU deal, and then what happened. The market got a little bit disappointed, right? So how do you get people over that hump, that disappointment? Because we had a conversation on last week about how it went down. You ended up with a deal. It's maybe not the miraculous, spectacular deal that you hope to be able to get. It's still a really solid deal, a really good deal. But the market hasn't yet reacted to the Denison UEX deal in a positive way.
No, not yet. I think for us, it's about trying to get people to understand what the deal means for the company, and that it's when you look at what we bought and what we paid for it and what the market currently values, it's trying to get people to understand that even without doing anything, there's value here to be had, and then anything that comes along on top of that's going to be a bit of a bonus in the short term. So yes, if we're buying pounds at 42 cents on 2 of the next 3 development projects in Canada, that are valued at an order of magnitude higher, that maybe there's room there for us to see movement in the space. And then I think for the what's more classic UX portfolio is getting people to understand that obviously there's a discount on our pounds compared to our peers, and helping people understand through the doing work on the ground that no, those are high quality pounds. They might not be as sexy as some of the things you see out there, but on a dollar for dollar basis or pound for pound basis, they're just as valuable. And I think that's incumbent on our management team to try to get that message out there. Things like what Shea Creek can do if we were to, and if we grow that by finding the next basement hosted deposit there, what Horseshoe-Raven can mean. And maybe it's not the next Arrow, but you slunk that project down in Wyoming and everyone's all going gaga over it because it's a fantastic project in the low cost half of the curve. So that's where we need to do better as a management team is help people understand our current portfolio. I think the JCU stuff will come out in time.
Yeah, okay. I get there's going to be a little bit that you got the chance to focus. Okay, we're a producer. As in, we have got Shea and assets which will be the first new assets that come into production. Great. With your assets, I asked you earlier, what's the difference between what you were going to do versus what you are going to do? You haven't got more money. You're not allocating more money to the drill program. I didn't hear you say that. Do you think these growth stories need a little sex and sizzle to them? You've seen what a lot of your neighbors in the Athabasca Basin have been doing with their projects, and it's all down to the high grade numbers that they've been throwing out. And you said pound for pound, ours are very valuable. But what's that mean? What's that mean for an investor? Why look at you guys?
Well, the funny part is I think if you're looking at a cash flow situation, how much do you make for every pound that you develop? And Raven Horseshoe, for example, we've had it since the company's inception. It's not monstrously large sized. It's pretty decent size compared to, say, a USISR producer company. But when you look at the PEA that's been done there, and you look at the cost of doing Millenium, or you look at the cost of Eagle Point, you look at the cost of McArthur River on a pound for pound basis, it makes just as much money. It's just not as big. And it's not as high grade. So people go, it's not 10% grade. Well, yeah, it's 0.3% grade, but dollar for pound, it makes just as much money. So it's a solid, it's part of our sustainability, or get people to understand that, hey, this is a good asset. It's not as sexy because it's not as high grade, but pound for pound exploited, it makes just as much money.
Okay, give us something to work with there. So how much smaller is it? Pound for pound, I get it. But if it's 1,000th of the size, then
Well, fair enough. So you're looking at something that's 37 million pounds. So but the cost to bring it to production is a fraction of what it cost into the Athabasca project. We don't have water issues the same. We don't have the support issues when it comes to really strong clay alteration that requires special freezing techniques. So it's conventionally mined. It doesn't have because it's lower grade, you don't have to put in super special radiation protection measures. It can be mined using more conventional techniques. So on a pound for pound basis, it does really well because it's an order of magnitude lower grade, but it's an order of magnitude lower cost.
Okay.
But in a drum, it's worth just as much money.
What's the PA?
So
give me some of the numbers. Sure. What's the PA?
PA break even was $45 a pound.
Okay.
So yes, it's not there today. I think that when you compare that to a Millenium, that's pretty comparable. Absolutely. So yes.
But an NPV of what?
NPV of about $160 million.
Right, so it's small.
So it's not a monster project. It's more comparable to a project you see in the Western United States, for example, or in South Australia, where you're looking at a couple million pounds a year, or £1 million a year as a high end. At Horseshoe-Raven, you're probably looking at 2 to 3 million pounds a year on a steady state basis. But it's comparable to an operation like that, I think. And so, yeah, it's not going to be the company maker, but it's certainly going to be something that's going to help sustain the company when we look at a Wheeler River coming to the end of its life, and there's a project there to be had to keep production going.
So let's look at what we should be looking. We should be prioritizing the order of these, right? Because that's a small project. It's not nothing. It makes money, right?
Our number one growth project is Shea Creek.
So let's talk about Shea Creek. What's going on there? Are you going to raise more money, double your spent, treble your spent? How are you approaching it?
Well, it's pretty easy to do better than zero, which has been where we've been the last couple of years. So, we have a plan that would spend probably $10 million over a 3 to 4 year window to test the 10 high priority targets where we've identified mineralization or structure and alterations all combined that hasn't been tested in the basement rocks. And it's particularly important to look in the basement rocks down below. That's when we look at the existing resource at Shea Creek, half of it's at the Kiena deposit. There are 4 deposits are essentially linked together over a 3-kilometer trend. And the bulk of those are in the basement along the cross-cutting faults. And then when anyone tells you high-grade deposits in the Athabasca Farm are 2 faults come together, and always the case. And it doesn't matter which project you talk about, it's always the case. So we've identified those cross-cutting faults, and we see the mineralization in them, but they were never tested. And it sounds really crazy to say, but this is exactly the kind of stuff that this team did. And when I was at Eagle Point, we recognized that people weren't testing these things, and boom, there's a new discovery. Millenium has a cross-cutting fault that's the key to the high-grade resource. McArthur River has those. We see 10 more of these that have not been tested. Oh, sorry, they've put a hole in it, but never been able to understand that they were thinking they're going to force that square peg through a round hole. They didn't realize that things were going in a slightly different direction. And I think what we can do is we've demonstrated to their partners that, for a very modest investment, to find another 50 million pounds through another Kiena would make that deposit the second largest undeveloped deposit in the basin. And if I was still managing chemicals projects, this would be way up on our list of priorities. Way up, but if not the number one, maybe more working at McArthur River, or what might be a little higher, or Shake, or at Cigar Lake might be a little bit higher grade priority, but this will be way up there.
So if you're so confident about that, why don't you take your newfound position, go and raise a stack more money and get after this? Because
at the end of the day, we don't have control of the project at this very moment in time. So that is our number one priority, because we think that's the best exploration project in the basin at that sort of resource level project. That would be, and it needs more work. Our friends at Orano, a little more financially constrained right now. Don't know whether they're coming or going, what they're doing. We've shown them this. The person who runs the projects there runs exploration there was the person involved in the discoveries of these back in the day. So they do believe. It's a question of whether they believe with their money.
But that's the point. But we've had the same conversation about Orano for the last couple of years. So they've got issues elsewhere in the world. They've obviously Niger is they've closed the Kamenak down, and et cetera, et cetera. So why can't you go and have a conversation with them? You're good at negotiating, I've heard.
Yeah.
So why don't you go and have a conversation? Say, look, we will take more control over this situation, and how whatever that looks like in terms of the split going forward between the two of you.
You're assuming we haven't then, because we have been talking to them. It's just a question of getting to a point where both sides agree. And that's just part of the negotiating process. And I like to say it goes fast. I mean, we put it on the back burner when JCU opportunity came up because it was the one that was time sensitive. I mean, everything's time sensitive, of course, but it took all of our energies to get JCU across the line, and we had to put that on the back burner for a couple of months. But yeah, it's probably one of the biggest things we're going to focus on post closing of JCU.
Okay, what could that deal look like?
I don't know, because there's a zillion opportunities of things that we can do. There's trades, there's outright purchases, there's joint venture option earn-ins, and it really comes down to what we're willing to pay and what they're willing to do. And at this point in time, major companies are not often liking to be in a situation where they're minority partners. So it sounds really simple. It will just do an option earn-in. Well, not every major company wants to be in the minority stake position. So that's a bit of a challenge for them. On the other hand, I look at that and go, I look at things a little bit differently than some of the bigger companies do, and say it's great when someone takes on the high risk work for you, and then you can be predatory if necessary. But Orano's predatory history hasn't been kind to them. So
how does it work with uranium assets? Not just uranium genius, uranium assets. Okay, how long can you sit on that and do nothing?
Oh. I do not understand that. And it happens frequently. I mean, gosh, the industry is ripe with those. I mean, Cigar Lake sat forever because they had to figure out how to mine it. Longer Heinrich was available. Borshoff picked that up for next almost nothing. In fact, the legend was there was more scrap material and machinery on there than what he paid for it. And they become world-class assets. And it's I do not understand the process. To me, it's even when I worked in the majors, it was all about, wouldn't you like to know what the potential of this is before you get to a certain point? I look at it, and I don't want to pick on our friends at Orano, but it's hard sometimes to sit there and say, hey, you have a resource problem coming. Don't you want to know what's here now so you can make the right decisions? And at the end of the day, I can't tell you why they think the way they do. Personally, I think for the amount of money that we're looking to invest, $10 million split between two companies to test these 10 targets to prove a concept and find out whether you have one of the largest deposits in the basin, especially with what's happening in the neighborhood, is really, it's time sensitive now. There's going to be development projects in that part of the basin. And, for us, we want to be part of that. We want to be part of that story and part of the decision making that's going on there. So it's time sensitive, and Orano might feel differently about that. They are a lot more patient. They're certainly a lot more cautious. The producers tend to be a lot more like their clients and being risk averse and have a much more negative view of where the uranium space is going. But I look at the next run, and you think, we had a huge spike in 2008, and at that time, Kazakhstan, was 15% of the world demand, and they're now closer to 50. And the world's challenges were saved by Kazakhstan coming from zero to hero in that brief period of time. Now we're looking at a situation where the resources are going to be in 5 years down the road, and be a similar situation that they were in 2005 and 6. And, I don't think Kazakhstan's not going to be there to save the day for the suppliers or for the utilities anymore. And it's going to be, the risk for utilities is growing. There's such consolidation geographically in terms of the players. And, as the big projects like the Rangers and the Comanaks and the Cigar Lakes a decade from now die. You're going to need, and due to resource depletion, you're not replacing them with single projects anymore. I mean, it will happen. There'll be another, there's an arrow. There could be others. And I don't believe in the complete depletion curve scenario, even in the Athabasca. But man, you're generally going to replace those with multiple smaller deposits. And if you're 100 million pound deposits are hard to come by, we're sitting on one at Shea Creek that we know isn't closed off. I do not understand why anyone wouldn't want to know that sooner or later. And I think they do want to know that sooner or later. Their financial constraints are just different. Right? I can convince shareholders to do this. They have to run a business, and it's different. And in a business that's predicated on cash flow and state support.
Okay, so I won't ask you what your options are because you're in discussion, right? Yeah, but I can ask you, have you got options to force this?
Oh, yes. Yeah, we do. It's so if they don't do work over a certain period of time, we can execute a program.
Well, that's public knowledge. So remind us what that is.
So that's not public knowledge. If they don't do work over a 2-year window minimum, we can do probably $1 million worth of work. And so we could pull that trigger any time. The question is, what's $1 million do when you know that I'd like to do a bigger program than $1 million. And $1 million is a lot of money, don't get me wrong. But you get a chance to test 1 or 2 targets, and we have 10. And you have to assume that you're going to hit the very best. With $1 million, you're going to hit the very best target in the very first try. And if you use that up, then how long does it sit for? Again, so I think there's a risk that if we're wildly successful on the first holes, which I'm comfortable with saying that we give it a try, but if you didn't, then what does Orano do? Do they sit on it for 5 more years before doing anything? Or do you embarrass them into doing something by having a success? And I think that's what we're challenged with. It destroys that kind of heavy-handedness destroys the relationships between the partners as well. And I don't think we want to do that. I don't think we'll do that just yet.
No, I understand. Like, I had a really good conversation with you last week about, the thought processes that management teams, boards, and CEOs have to go through. So I kind of want to, again, understand when I ask the question, do you have options to force their hand? Yeah. Is there me in my banking days, if someone came to me and said, right, if I can engineer a situation like this where I can force my partner out, or at least to give up a large proportion of their holding by spending X dollars, contingent on you giving me money, I think I can do that. And I'll say to you, well, contingent on you getting that in writing, I'll give you the money.
Yeah,
it's quite aggressive. But when I say, have you got options? Is that an option in your bag?
Oh yeah, no, absolutely. And then I think when we've had our discussion that we've narrowed it down to a certain window of opportunities, and that comes down to getting what the right price might be. So that's kind of where we're at in that whole process. We can force things through the joint venture, which I don't really want to do because I think it's a one and done, and it's not on a whole one. It's like you get one small swing at it, and you hope that you hit the home run. But I think I'd like to be able to do a little more than that. But yes, we've been talking to them about how do we it's exactly the kind of thing you were just talking about. What does it take to get to that finish line? And I think we're not far apart, but we're far enough apart right now.
Okay. Shea Creek, watch this space. But you're on it. Christie Lake, you talked earlier about the summer drill program and what your hopes are there. But again, how much you're in a bit more control there, obviously.
Control, yeah.
Right. So you can throw money at this thing. There's one of your 2 flagship growth stories. You can throw money at that. Do you? Again, I'm trying to get back to what's changed.
Oh no, we want to do more. We want to do more.
Okay, good. So what more? Tell me what the more bit is.
Well, it's not so much identifying the targets, because I think that we have in spades and say what things you want to do. It's just how much money do you spend there? How many of those do you test? So the operational tempo is certainly going to go up on those projects like Shea, when we get Shea Creek liberated to do work at Christie Lake for sure. And then, when we look at probably some of the next projects, there'll be some targets on our Hidden Bay project because they're basement hosted, shallow terrain. And we're getting good, I know that it didn't strike people in the last news release that we put out a couple of weeks ago or last week that this alterations and we picked up north of the Raven Horseshoe is something, but our team's pretty excited about it. So yeah, those projects will see more money in a shorter period of time. And so operational tempo will definitely go up on those because I think we're now at a point in the market where just, we've been very methodical, waiting for the right time to invest this money. And now I think people are ready for the pace to move up, and we can invest more money when we do these things.
Right. Okay.
In a given project. Instead of doing $1 million program, it's maybe a $4 million program.
Right. Okay. Spring coil. We're ready to go. So do you go out and raise more money to do that? You've got $5.5 million in the bank, you told me.
Yeah, I think, we need to raise the money to pay back the Denison angle. And I think our view is that, okay, what do we want to get through to the end of 2022? What do we anticipate we're going to see our funding obligations at JCU are going to be? And what do we want to accomplish on our other projects? So yeah, I think when we look at that, we will probably want to raise that $25 to $30 million range. So we'll be sitting on 10 to 15 million in the bank so we can do more.
Okay, fantastic. Good. And let's move on to this sort of the farm out. You've got 31, 32 projects?
It'll be 31, when we add the JCU projects.
Righty-ho. Okay. So you got a bunch of projects. We've talked about
of which 27 of them are probably not valued in the company, yes.
Right. Okay. So what are the ones you're looking at which you think we can farm this out or flip it out, because we've got cobalt in the mix here. And what's the order of priority there?
Yeah. So I'll just do the cobalt one because it's by far the easiest to discuss. We definitely want the cobalt spin out to occur before the end of the year. And there are two properties in that portfolio that are grassroots, focus more on the cobalt nickel angle, that probably go with the West Bear project into that spin out. So that's something we definitely want to do. I think it's very hard for us in our bigger uranium state to sit there and put money into cobalt. So yeah, that and I've told you before that we've been patient about waiting for things to change. The cobalt market is certainly changing. The cobalt price has gone in the right direction. And there's an absolute complete lack of exploration in the space for cobalt. So while there was in 2017, 2018, a very hectic flavor of the month kind of scenario where people were pretending to be in the space, no one's really exploring for cobalt. So I think there's a bit of room there now. In today. So we'll work on that. When it comes to the projects that we would consider vending going forward, I think that quality of those projects have changed. So what I mean by that is we had that real pre-grassroots portfolio, and we were kind of saying, let's only work on those because we have 4 projects we really like that we didn't really want to vend out assets in because we didn't have higher end projects like we're bringing with the JCU side. So while we won't vend out Hidden Bay, there are pieces of Hidden Bay because it's a huge property that we would vend out. For example, our McLean South target, where we've got Eagle Point type scenarios, and that's near and dear to the hearts of my geologists. They love it, but it's not going to get funded in the current portfolio right now of what we're going to do because we're focusing on those other projects. Maybe that's something that, that would be a flagship project for almost any other junior company. And piece of that project we can start breaking things apart to be able to vend more higher end projects that will get more interest, I think. So I think what you've seen, if you looked at that pipeline chart the table we have has our pipeline, we wouldn't have ever touched anything inside that resource and mid-stage category. Now those are probably more accessible.
I love that phrase, pretending to be cobalt companies, because it's so true. so here's the question off of that is, if you are going to farm out some of your assets or parts of some of your assets, you can play that one of two ways, because there'll be people pretending to be uranium companies if the momentum comes, right? You've got to pick companies that either you think there's a good, strong momentum story and you'll be able to, ride that wave and, make a few quid by selling shares, or you're going to have to pick companies that you think could genuinely have a chance of getting into production at some cycle down the line at some point, right? So you've got a few ways you can play this. So are you going to be a purist about it, or you just think this is just about the money?
I think it comes down to the right group, the right time, and depending what their options are. There are clearly players in the space that know what they're doing and they don't need our help. And there are certainly players that want to get into space who don't know where they're going and don't know how to get there. And if you look back at the very last cycle, I think there was a ton of money raised. And my opinion was that people just started to get dangerous and know what they're doing when the market collapsed. So, if it's people who have money and want to get into space, well, then they can lever our team and we can work with them to get access to what I think is a very high caliber exploration team. If they're a high caliber exploration team that can do things on their own, don't need our help, great. So I think that the style of deal comes down to who comes to you and what assets they want to talk to. But I think the thing we'll probably avoid is the people who don't know what they're doing and say, we're going to do it on our own, because then that's how you get an asset stranded. You get stranded on an option agreement or an option on an option agreement or an option to have an option or something that you give away an interest that doesn't accomplish a whole lot. And that happened a lot in the last cycle, to be fair.
Well, it went from 50 companies to 500.
Yeah, and it was crazy. And it was painful to watch, having vended out a couple of projects back then, to watch things, watch the wheels spin as they started to get up their learning curve knowledge. And I think that the way it struck me best was my former boss when I joined Cameco, the VP Exploration, took me around Cameco's second floor office building, or second floor of their office building in Saskatoon. And we took about half the space, and we probably could have fit 100 people in the space, in the cubicles and the whole bit. And he goes, you can put every uranium exploration geologist in the world in this office and have room to spare, back in 2001. So that's the learning curve that people started. And that wasn't just the Athabasca side, that was the global side. And so that's your Africa expertise, your Australian expertise. And so as they look up the learning curve, now there's a lot more skilled people out there available to be had. So I think there's a lot less learning curve to go, but there are a lot of new people want to come into the space as well, who need to either hire the expertise or borrow the expertise. And I think for us, I don't want to have someone invest in our companies who are trying to develop the expertise. They either want to borrow it, rent it, or they have it, but not develop it themselves.
So you're talking about exploration expertise. There's a little bit more exploration expertise because of what happened back then. In terms of teams who have built and produced uranium, not a lot of those.
No. That's a pretty small club.
Yeah, very small club. Okay. Well, look, Roger, that's a nice update. I've got a better sense of what the plan is and how you're looking at things. Do you, again, what as a CEO, what's going on up here? It's like, do you look at yourself now and go, I'm genuinely a producer, or is it just like a sort of nameplate? Because it seems far away and sort of out of your control. And if you are standing in front of a financier, a bank, institution, whoever's you're talking to about money, can you say that with utter confidence that I'm now in a new club? I'm no longer an explorer story. Give me some money.
Yeah, no, I believe that firmly. Do I say we're a producer today? No, I mean, the reality is producer today is going to be dependent upon what happens at Wheeler River before the end of the year on their feasibility study and the work that they're doing with their technical stuff. And if it pans out fantastically, great. We're going to be producers sooner than later. And if it doesn't, then there's some rethinking or retooling of how they do things at Wheeler River. They're going to change. Millenium, is a Cameco story. When they're ready to move it, it will move. But I do know it's their number one development project in the basin. We do know that MacArthur is going to come on first, maybe not, Rabbit Lake second. And so they're going to need to replace the Cigar Lake. And it's going to take 4 millenniums to replace the Cigar Lake. So they only have one. They're going to need it. It's going to move. So it's just a question of when, but we don't control that. So I'm happy to be, in that developer producer category. What we control is what we can grow, what we can find right now. And that's what we'll focus on our team's effort on. The company's effort will still be on, financing that, but also making sure we meet our commitments under the development portfolio.